What's going on, guys? I hope you're enjoying your Saturday. This video is going to be focused on our trade of the week. It's a video that we only give out to our members, but I wanted to put it together for everybody to get a look into what we're doing over at Forex League. The whole purpose of this is that every week we give out trades in our signal room. We put them in our Telegram chat before with analysis, and then follow up after the trade goes out. Give our members the opportunity to see the thinking process, how I think through a trade from the higher time frame to our setups, to our levels, to our entries, to our projections, and to trade maintenance. These are all, I know, key things that everyone wants more information on, and we just get really into it, hop on the chart, and obviously you'll see soon and go over everything. Complete transparency as to how we're taking trades, and we really give you the insight as to how we're executing with price action. Price action is king. So again, this is trade of the week. This week we looked at AUDJPY. This was a trade that we put out that got over 100 pips. I'm excited to get started. Hope you guys are ready to take notes. Let's get right into it. All right, now that we're on the chart, let's take a look. This was the original analysis posted on Telegram. AUDJPY rapidly approaching weekly resistance at 73.500. That's this level right here. Looking to enter a confirmed reversal after the 38.2 has been tested. We are looking to target the monthly support level around 68,500 and potentially lower toward the negative 27% fib level around 67,100. So this is the original analysis. Let's see how it played out. So this is how it played out. Came up to this level, hit resistance at the 38.2, and then actually dropped, and we executed around this area right here. So there's a lot going on in this trade. I'm going to hop over to my chart, and we're going to take a look. So right here, just starting from the top, we're on the weekly. This is what I saw. I got my weekly and monthly levels marked. So it's at a monthly level down here. This is before this past week, and then we have our weekly level up here. I saw that it dropped below this level, so that was extremely significant. So I marked this red zone. That's our weekly resistance level, and then I also fibbed on the weekly, or on the weekly time frame or the daily, and I actually on mine have around a 61.8. So let's go down to the daily. So down to the daily, we're seeing price near this. It's at the 61.8. There's I saw a lot of resistance, so the exhaustion, buyer's exhaustion, and then we have buyer's exhaustion with a low volume. So basically from this area, we're really just looking for a setup, and by setup I mean a bearish variation, to see when it's a good time to get into the market. Come down onto the 4-hour time frame, we see how price is squeezing to the upside. We see how there's a setup here off of this zone, but it's really, the MAs aren't pointing down yet. We're waiting for really a setup through the moving averages before we considered this trade. So I'm just going to play a few candles forward. We see how price opened. So price opened and the market pushed this down, which is good indication that this pair of the momentum was heading to the downside. So let's keep playing it forward here. I really want to wait for a setup before then looking into this area. We see right here we have a setup off of our zone, and so let's now go down to a lower time frame just to check out what is currently going on. So yeah, this is a setup. We have a break of support here, and then we have a bearish variation but with slight resistance. We see this little wick come in at the bottom here. So there's some slight resistance. This doesn't exactly engulf, so we're still going to wait, and we're going to see how it plays out. And mind you, we haven't looked on this lower time frame until that confirmed 4-hour engulfing. So we're seeing some resistance in this area, which is why we didn't enter, and then we see how price comes back. So at this time, we're looking for an entry, which our entries, to reiterate, is a moving average or a bearish variation through our moving averages. We have the 200-day on the chart. We have the EMA and SMA. So we have 8 and 18. And then now we see on the lower time frame, M30, a slight break of resistance. So at this time, I'm going to go up to the higher time frame and check out what's going on back on this time frame as we wait for another setup to present itself, so then we get in the market when it's transitioning to that lower time frame structure. So here we go. We have this break below this level. At this point, I know that Nick actually did signal the trade right on this area, right in here. So we have this breakthrough, the moving averages, and this drop through. This was a potential entry. It satisfies our entry rules. Break below the moving averages, bearish variation. At this point, we went up a time frame, and we didn't see this. So let's sort of play this out and see if another entry potentially presents itself. And as we see, there's evening star here, which is a good indication of what's to come. But at the same time, we can't exactly protect ourselves as well as we'd like with our stop loss, because I'm not comfortable with our stop loss based on the zone that we're in unless we're above this area, which is about 60 pips. So we can take the trade based on this and have our stops 60 pips in that area, and we'll target on this higher time frame, we'll target a legitimate zone. So we'll target, say for example, we target this monthly level or this 200-day EMA down here. We can get that 2.0 ratio, but as you can see, our entry isn't as precise as we'd like because we're really entering at a breakout at a low. We're really entering at a low. We're trying to wait for some sort of pullback. So we're trying to wait for some sort of pullback into this area where there's confluence, and then we can then re-enter again. So let's see if this trade actually presents an opportunity. Again, these are the two entry possibilities that did come into play. But let's see what price actually does now as it sort of makes its way back into this higher zone. So we have another variation right here, but there's a lot of noise on this lower time frame, and we're on the 30-minute. So say we go up to the 1 hour, we can sort of see where we're at. There's a lot of seller's exhaustion in this area. The pullback potentially is imminent. So we'll see now. We'll play forward a few more candles. We see how the market starts to pull back. We're still looking for that 30-minute. We have that break below this level. So we're still looking for that 30-minute entry. We're looking for that 30-minute entry. If we want to fib this, remember this was our higher time frame setup over here. I'm just going to mark this in this color. And then this was a potential M30 entry off our resistance, but we know we can't protect ourselves as well as we'd like, so potentially we'll wait on the sidelines. If we don't enter there, we see price start to pull back into this zone with buyer's exhaustion. If we want to fib on this lower time frame, we can sort of get like a fib level. It's coming off that 61.8. That's an area where price is about to go to, and we can see if then another entry presents itself for us to get in. So as we see, if price breaks that 100% level, then we're really not going to be in this position. And then here, this is an entry that I would like to take. We have we're at a fib level, but at the same time, we haven't broke that 100% level, and then we have our bearish variation through the moving averages. We could even wait to break below this 200-day EMA, but at this point, I know the zone that I'm in is very strong, so I'm valuing this area tremendously. And then at this point, if we want to protect ourselves very modestly, like conservatively, we can come to that 40 pip area, which I like to target, and then we can get that 2.0 ratio a little bit better than having a 60 pip stop loss. And then if we go up to our 4 hour, we can sort of see where this level is now being placed. It's being placed around this level of support, which was wicked off of, which was an extreme level. Definitely a significant level. And then this is sort of our next area of like support and resistance, these small. But as we can see, there's a lot of room for this to fall, which it did. So let's get back onto the 30-minute and let's monitor this trade based on this entry. So at this point, I've entered. I'm pretty confident in my entry. I know it's according to my rules, and then we'll play it out. We see, as I said, maybe a break below this level. So another entry actually does present itself. That's this. This is another great entry right here, even better than the one we just took. So that's a bearish variation through the moving average. That right there is pretty sweet. And then how I would monitor this trade is I like to, when we get to about 1-to-1, move our stops to 0, or we see a formation of the next, in this case, lower low. So we're forming a low here. That it hasn't broken this level. This is our lower low right here, previous lower low. It hasn't broken this level yet, so we're going to still wait. We're going to monitor this trade and still wait for it to significantly break a level. And as we know, as the signal members know, this trade was one that took a few days to actually play out. So yeah, let's just continue to monitor this trade. And mind you, we're looking to break this previous lower low to really send this lower and to also move our stops to zero. And then another thing that I caught when I was looking at this, we'll go up a time frame, is, and as you see, this fell pretty hard, but we can go up a time frame. And another thing that I caught was the formation of a descending triangle. So we had a descending triangle come into play in this zone. We can draw from this area, or we can draw a little bit cleaner, like from this wick right here to this wick right here. And then so we're seeing the formation of this descending triangle. For any of you that don't know what a descending triangle is, I'm just going to pull this up real quick, and we'll get to the descending triangle. So right here, descending triangle is actually a continuation pattern. So we have right here, asymmetrical triangle patterns are very popular. Often the triangle is referred to as a continuation pattern, but that is not always the case. These patterns show a push in price action with one side of the triangle being flat. Either support or resistance is flat. So yeah, this side, descending triangle, this side is flat, potential retest. This one just so happens to fall completely out. So here we are, price falls. My stops at this point, we'll go back to this 30-minute. My stops are going to actually be moved. So we see price fall pretty significantly. We're up about 53 pips. At this point, I do want to protect some of the profit. I'm at the least going to move my stops to this level above this previous lower high right here. But if we want to actually protect ourselves, put it slightly above this retest zone right here, we could do that, and we'll capture around 20 pips no matter what happens in this trade. But I'm going to monitor it at that level. At this point, now that we're at 76 pips, I would even monitor it even closer. So I'll start to look at levels of structure on this side. We see that this is like a key zone right here that it potentially retests. We see a touch situation on the line chart. So we have boom, boom. So from there, I'll go down to that lower time frame again and monitor my trade based on this level. And we've already bagged on this trade like around 40 pips. So yeah, that's just maintaining this trade. We'll see how it sort of plays out, where price goes to. Again, we fall a little bit lower. At this point, we can move our stops even lower to another situation around that level right here. And again, I'm just using this area over here because we're looking for structure to then help us make a decision on where to move our stops. Always base your stops on structure. And then we had price come back up, potentially to retest these levels. And then we have a formation of like a slight little break of support right here. And then we see price like continues to fall in this level and eventually makes its way to our TP. And then at this point, further maintenance of this trade would be down to this level, and we would just go to this higher time frame, see where we are. We know where we are, so we're targeting this lower level. They'll target the 200-day EMA next. All this resistance now turns support, and yeah, we'll just continue to monitor that trade. So that's everything we went over. Went over the higher time frame. I broke it down to the lower time frame setup, and then we looked at entry time frames, and yeah, everything that we needed to do to maintain this trade along with our projection levels. This was our trade of the week, AUDJPY. This was again taking in our signals. I'll pull up real quick so we can just take a look and see our signals. So we have here premium signals. We have AUDJPY right here taken at 74.05, and right here our entry, which Nick's entered right in this area, 74.05, and then we had our other potential entry 12 pips higher. Trade of the week. Thanks guys, hope you enjoyed the video. Take a shit ton of notes, a lot of nuggets dropped in this, a lot of things that you can get out of this. We'll see you in the next trade review, and if you're not in the course, we hope to talk with you soon.